Regrets. We have Councilor Manzer, Councilor Thurber, myself, and for staff, we have Manager of Municipal Services, Tyler, CAO, Jeff, and Executive Assistant, Pat. The other two, Matthew and David, are regrets, and our staff member, Coral Lee, is regrets Manager of Corporate Services. On saying that, I'd like us to pause to seek guidance. And now we will have a reading of the mission statement. To provide, promote, or facilitate municipal services that meet the community needs while preserving, supporting, and enhancing quality of life for all. Now, under our special agenda, should I have approval of the item of the audited financial statement to be agreed upon? We cannot add or delete anything from this meeting.
Okay. So, I'll move the approval of the agenda.
I'll second it. All in favor? Aye. Contrary minded, motion carried. So, our audited financial statement is going to be done by Aaron Kelly, who is representative of Grant Thornton. Is that the proper way, or do I say as an auditor?
Say whatever you want. You're the boss.
Proud of Maple Leaf fan, where we're on video. Proud of Maple Leaf fan, Aaron Kelly.
It's fine. It's fine.
But people might not like that.
What? The Maple Leaf fan, or where I work, or that I'm an auditor, or all of the above?
All of the above. Of course, you're not with the tax people yet.
No, this is just government ticking boxes here.
So go ahead, Aaron. The floor is yours.
Okay.
Thank you.
So we're just going to start in on the financial statements. A new draft was not distributed because there's been no changes. The only addition to the draft that was presented, 3 weeks ago, was the King's Transit, and I will go over that in detail. But other than that, everything's the same, no effect to the bottom line, just a bit of disclosure. So if we go right to page 1, the Independent Auditor's Report, it's the important piece of this 30-page document. This is our opinion. So it's a clean audit opinion. So we have audited the consolidated financial statements of the municipality, which comprises the statement of operations, changes in net assets, and cash flow for the year ended March 31st, 2022. In our opinion, the accompanying statements present fairly in all material respects the financial position of the municipality as at March 31st and the results of its operations, changes in net assets, and cash flows in accordance with public sector accounting standards. That's the accounting standard that you follow. So that's happy news. No shock there, as we told you before. So clean audit opinion. Basis for opinion. So we have conducted our audit in accordance with generally accepted auditing standards. So you've all heard this before, but here we go. So there's a standard set of rules that apply to doing audits, and we tailor them down based upon the needs and the risks of every client. So there is a standard overall approach methodology that we follow. We just don't wing it based upon how good the treats are. So we are independent of the municipality. So every year we have a process we go through just to make sure there's no new conflicts that arise or anything. So if we were not independent, if you had undue influence on us or were threatening towards us or anything as such, we wouldn't be able to issue our opinion. So there's no matters as such to report. And we feel we've fulfilled our ethical responsibilities in accordance with the auditing standards. We believe the evidence we have obtained is sufficient and appropriate to provide our opinion. So it doesn't mean it's a guarantee, but we feel like we have done enough work to provide our opinion. So there's an other matter. So our audit was conducted for the purpose of forming an opinion. Pages 8 through 12 are not required, but they do give a lot more detail and breakdown of your income statement and balance sheet. So they're only audited to the extent of the paid necessary. That's just a disclaimer. All those numbers are audited. It just gives a lot more detail, and it makes a lot more sense than the first couple pages do. Responsibilities of management and those charged with governance. So basically, management is anybody that gets paid to be here. No, that's not true. Your employees are management, and then council is those charged with governance. So management is responsible for the preparation and fair presentation of these statements in accordance with public sector accounting standards and such internal controls as they deem necessary to prepare them free from material misstatement, whether due to fraud or error. So in this case, you engage Grant Thornton. I actually prepare these statements, but it is management's responsibility. They oversee the process. They work with us, but we just put it together. In preparing the consolidated statements, management is responsible for assessing the municipality's ability to continue as a going concern. Going concern basically is a 12-month test. Will you exist next August? It's a standard thing you have to do every year. If you were not a going concern, these statements and reports would look very different, and you'd have heard about it a long time ago, not 4 months into your year. And those charged with governance are responsible for overseeing the financial reporting process. Auditor's responsibility. Our objective is to obtain reasonable assurance, whether due to fraud or error. So reasonable assurance is a high level of assurance, but it's not a guarantee. This is not an audit for fraud. We are already suspicious of fraud. We kind of factor it into our procedures, but as we've said before, if two people want to collude, it would be very difficult for us to find it short of stumbling upon it or having a whistleblower. So this is not a audit of fraud, though we are on the hunt for it. Misstatements can arise from fraud or error considered material. If individually or in aggregate, they could reasonably be expected to influence the decisions of users. So basically, if there was a $10 mistake in here, no one would care. If there was $1 million mistake in here, we would care. So that's kind of what reasonable assurance is about, making sure it doesn't affect a reasonable user's opinion. Also, as a part of our audit, we have to identify and assess the areas of risk. So it's pretty standard. We have a long-standing relationship. Your operations don't really change, so more or less we know what's going on. I live here. I see what's happening. But every year we do reassess your operations as to where we think the risks are. We have to obtain an understanding of internal controls. We don't audit your controls. We do have to understand how they work and are implemented. We evaluate the appropriateness of your accounting policies. We conclude on the appropriateness of management's use of the going concern assumption. So obviously, there's no issues there. We're in agreement. We evaluate the overall presentation of the statements. And lastly, we have to have formal correspondence with those charged with governance. So this meeting and the previous meeting. So that's the important part. That'll make the province happy anyway. And then the next page is the management's responsibility. So, as we said, these financial statements are the responsibility of council and management, but as part of your reporting requirements, the province requires that you actually have a document in there specifically where you sign. Other statements, if you're on other boards, you would not see this. This is only for municipal governance. Yeah. So, page 4 is your statement of operations or your income statement. So overall, revenue for the year, $8.7 million. That's up almost $900,000 over last year. You had budgeted $8.1 million, so you're about $600,000 over budget, which is good. There's two main reasons for that. Basically, it's deed transfer tax. That's a flying target at the best of times, and this year was obviously really strong, so your budget on deed transfer tax is about $300,000 less than you thought it was going to be. And then you got a double equalization payment, so there was another $300,000 there. So that's the main. If you took out those kind of blips in the radar, you're basically bang on budget in every revenue category. Taxes are up $340,000. Basically, as we've expected through COVID and our property sales, there's a $130,000 increase in your residential, in your tax assessments. Deed transfer tax is obviously up. And that basically is what makes that up. All your taxes went up. Grants in lieu of taxes, almost identical as last year. The majority of that is your Nova Scotia Power grant that you get. That's $700,000 of that balance. Services provided to other governments and sales of service, very consistent with year over year. Other revenue from owned sources. So that's up a little bit. So basically, interest on taxes increased $100,000. So obviously during COVID, you had periods of no interest and periods of reduced interest. All those policies are now gone, so it's a full year kind of back to the way they were. Which that upswing in revenue is offset by the turbine not spinning enough during the year, being down. So you gained $100,000 in interest and you lost $75,000 on wind turbine. Unconditional transfers from other governments. Obviously, we see 350 up to 688, so that's the double payment of your equalization funding. And then conditional transfers from other governments. That's up. Majority of that is gas tax revenue. 652,000 as opposed to 172,000. So I'm going to refer to it as gas tax because that's habitually what I say. You only recognize gas tax revenue when you spend it on a project. Everything else gets deferred. So your actual gas tax payments were around 700,000, almost 750,000 with a double payment. But the money that was spent was 652. You also had $12,000 of Safe Restart money. That's a significant decrease from last year where you spent $230,000. So there's various categories that the province has set out you're supposed to spend, and your management team sits around all year wondering how can we figure out what expenses to jam in this to get rid of this money before the government takes it back. Pretty consistent with other units as well, so that's kind of the normal. And then also there's trail project funding. There's $14,000 spent on that. Last year you had 60, so there's a deviation there. And the only other new item for this year was there's $25,000 in lighthouse funding when you took possession of another lighthouse this year. That's the major items there on the revenue side. On the expenditure side, general government services. So you are up $167,000. Which is slightly deceiving because your clerk's pension valuation, you had a surplus last year, and this year you just didn't have as much of a surplus, so the surplus decreased $90,000, which is a increase in your expense, but you didn't actually spend that money. There's also a $23,000 increase in your grants to organizations. That was expected as a lot of organizations were functioning during COVID, so that was an expected increase. And then your payroll, your scales for your staff member, there was some increases there. Effective services, it's up $121,000 from last year. Majority of that is your RCMP contract, which is up $70,000. There's also a $22,000 increase in your dispatch costs. There was $14,000 spent on spare dispatchers and also training. And then there was a $7,000 increase that you pay WCB premiums on the volunteer firefighters now. So that's what makes up the increase there. Really bang on budget as well, same as transportation services, $821,000. The only item of note in that really is the avgas. The cost of that was up about $20,000 over last year. Other than that, it was very minuscule changes. $4,000 off your budget, so that was pretty accurate. Environmental health services, $1.6 million. Again, bang on budget, $4,000. So that is $157,000 more than last year. So there's a $35,000 increase to the solid waste disposal costs, just per the contract. There's $90,000 in the shared cost with the town, the lift stations. So there was two major items this year. The force main break on Main Street, and then there was repairs done to lift station 1 and 2. Force main, your share of that was about $50,000, and then the lift station upgrades were about $45,000. So that's what was going on there. Environmental development services, we budgeted $512, we came in at $491, so that's almost identical to last year, $28,000. Major items in there. It was $34,000 for rural internet services, and then last year that would have been $100,000. Your contributions to that vary depending on whenever Bell decides to finish the work, and even after that, when they decide to give you a bill, there is a lot of money set aside in your capital project for that. As you don't own that infrastructure, it comes out of your gas tax money, but it's not a capital asset to you guys. The only other thing in there that's new is there's $37,000 to the Digby Harbor Port Association for their capital projects, and that's a 4-year commitment on that. So we'll see that hanging around for the next few years. Recreation and cultural services, you came in at 622 against a budget of 668, still pretty close. No significant items there. There's $10,000 increase to library costs, $11,000 added to the Heritage Property Grant Program, and then the trail projects that you're continuing to develop, there's an extra $10,000 spent there. So overall, you spent $7,687,000 against revenues of $8.7 million. So you had an annual surplus of $1,044,000. That gives you an ending surplus of $17,536,000. So if we go to the next page is your statement of financial position or your balance sheet. And so cash and cash equivalents, you're at $5,018,000, so you're $400,000 higher than we were last year. Basically, you had a significant surplus. You got double equalization payments, deferred revenue increased due to tax deposits, gas tax, various items. So we expected to see an increase there. Your reserve funds, so your gas tax bank account increased between interest and excess funding. You transferred funds to your capital fund to help stock that up on your surplus. That's why you see that move up. Tax sales surplus, so that's when you sell tax properties and people don't take their money, you get to hold on to it for a while. So that $699 has a corresponding liability down below. Every 20 years, they don't come for their money, you get to take it. So not a huge change there. Receivables, $1,088,000. That's down from $1.2 million. Overall, there was a $35,000 decrease in accounts receivable, $44,000 decrease in loans to the fire department, $20,000 decrease in your PACE program. There was no new issuance of PACE loans this year, so we expected to see that decrease. And actually, your taxes receivable, you saw a decrease in that specifically, so your collections are pretty strong. Usually, your tax receivable balance is about 10% of your annual billings, and obviously, you can sell everything, so there's really been no history of any issues there, so that's a pretty strong position to be in on taxes. Now then, your pension benefit excess. Eckler basically comes in and says, this is what it is. So that's a pretty strong position to have one member left in the plan. So when that person, when your member is deceased, then you'll get a lot of that money back. So as long as the market stays strong, there's a good chunk of change sitting there. So your total assets of $10.9 million. Liabilities, so we have tax sale surplus, as I mentioned, that just balances out with the cash account above. Payables and accruals, $630, so that's up $261,000 over last year. Basically, your trade payables are up $150,000, so that's just timing. And of that $150,000, there's a nice $60,000 bill from Enercon that slid in there at the end of the year, so that basically makes up a lot of it. And then your 6-month tax sale excess, you had $114,000 from that March tax sale, so that has it sitting there for the 6-month period, so that was very strong. A couple properties sold well. I think we'll expect to see that trend continue, given how the market is. So that's where we see our significant jump there. Payable to fire department, so you collect, fire department set their area rate, and you collect it throughout your tax process, and then that's held in what you would call reserves to the fire department. We just call it, it's payable, money owed back to them. So that increased a little bit. That funding you use to cover loans and various things. Deferred revenue, $2.4 million, so that's up $100,000 over last year. So as I've already mentioned, your gas tax funding is about $100,000 more than what you spent. So you spent $650,000 and you almost got $750,000, so that's why you see the increase. Also included in there is the prepaid taxes. That was about $20,000 more than last year. And then the Safe Restart funding, there's $185,000 left in that. And then your long-term debt, you have 2 loans to the Municipal Finance Corp, and there's $179,000 principal payments there. One of those loans will mature in 2 years, and then the other one will mature in 5 years. So your net financial asset position, again, very strong, $6.3 million. So your net asset position increased almost $930,000 over last year. Tangible capital assets, $11.2 million. So that's up $115,000. Basically, in the year, you spent $676,000 on additions there was $562,000 of amortization. Significant additions this year, transit bus, $555,000. Repairs to the airport, parking lot, $36,000. Library roof repair, $28,000. And there was a cabinet replacement on the Weymouth pump station for $26,000. And that gives us an accumulated surplus of $17,536,035. And because I did my job right, that agrees to the first page. So then the next page is statement of changes in net financial assets. That just walks through how we got from our annual surplus to our net financial assets. So we just take our surplus and we back off the acquisition of capital assets and we add back amortization. And that's how we get our change in net financial assets. Page 7, statement of cash flow. This is really the accountant's page. You start with your surplus and you walk back all your changes in balance sheet items, acquisition of capital assets, repayments of long-term debt, and that works its way down to how your cash balance actually increased $400,000. So as we said before, pages 8 through 12 are just more details of the different categories of revenue and expenditures. Page 13 is where the actual notes of the financial statements start. So page 13 and 14 and 15 are all significant accounting policies. The only addition to that, as we discussed before, there's new accounting standards coming into place in 2023. So we disclose what policies will end up being adopted by the municipality next year. That's the only change there. Page 16, note 2, that kind of breaks down your receivables. So it gives you your tax receivable, breaks through what prior year balances you started with, your current year levy, interest charges, and then breaks down of the $650,000 that's still outstanding, how much relates to that year's taxes and how much is from years prior. Then we have receivables from fire departments. So you do have loans that you guarantee for fire departments. So there's $218,000. There's a little bit of receivable to the town of Digby, HST, PACE program for renovations through tax accounts. Some monies from receivable from the province. Ground search and rescue, you loaned them money to buy a truck. So that's getting worked off, and there's some miscellaneous amounts in there, $46,000. And then we have asset valuations. That's basically 5% of your tax balance is what management deems uncollectible, just as an estimate. We know that'll never be touched. Short of only time you really lose on properties if there has to be a demolition and it goes to tax sale and you might not be able to recover. You do have an unsecured line of credit for $1 million. There was no balance drawn this year or last year. We just disclose your tax sale surplus, 20-year holding liability. Note 5 on page 17, that just breaks down all the different categories of your capital assets, what you paid, and then what we've expensed over the lifetime. This is by no means an assessment of their value, it's just what you've actually paid. So some things are worth a lot more than you paid, and some things are worth a lot less. We won't talk about the biogas, generator. And then at the bottom, it just gives the net book value, so what you paid less what we've depreciated over time, and that ties back to the front. Page 18, deferred revenue. So this was an update from last meeting. So Linda, while you're out, I did mention that I will refer to it as gas tax because that's habitual, but all the references have been updated to the Canada Communities Building Fund, except for the portion where it refers to the agreement, because the agreement is still the Canada-Nova Scotia gas tax agreement. So everywhere except that one word references it, and everything else has been changed. So basically you had $1.9 million of gas tax. They funded you $750,000, and then you spent $650,000, so you have just about $2 million left over. Then your safe restart money, $185,000, and then your tax people that like to pay their accounts in advance, $230,000. Long-term debt just gives you the breakdown of the two loans and the details, and then shows all your payments over the next 5 years. Note 8 is your commitments and organizations that you have an interest in, and how much money you funded them throughout the year. Contingent liabilities, note 9 on page 20. So fire departments that need larger loans, you have a $2 million revolving debt with Scotiabank that you guarantee for these fire departments. So you have three departments this year that have amounts outstanding, and then their area rate, you just cover the payments with that. There's never been a time where you've had to actually cover that yourself, because you make sure that the area rate can cover the annual interest and principal. You also guarantee a loan for the Digby Area Recreation Commission. You guarantee that with the town, so your portion of the loan is $41,000. And again, no amounts have ever been required over that. Note 10 is disclosure of your remuneration and expenses for council and the CAO. And page 21 is the new part. So, last draft you saw, note 12, was pretty sparse. So again, this is just the details we got from the approved drafts from King's Transit. We added that in. So fares went up a bit, as we would expect to see as COVID restrictions eased up during the year, in your municipal contributions. Nothing really interesting in the expenses. Fuel increase as we expected. Insurance is up. That's pretty normal. We've seen that across the board in other organizations, so we expected to see that. So overall, you had a $4,800 deficit, pretty similar to last year. And then down below, we just reconcile it out. So your budgeted contributions for the year were $291,700, and then you also funded last year's deficit through Safe Restart funding. So that's how we get to the $299,450 that you actually paid them. So that's the new piece. And then note 13 just reconciles your approved budget to PSAS. And then we have segmented disclosure. This doesn't really mean a whole lot because you don't budget this way. We just have to go through and allocate revenues and expenses. Expenses do make sense, amortization by category, salaries, but all the revenues, like your taxes, don't get allocated to these categories. It's just a process we have to go through. And then the last page is your reserves. Just breaks down how much income they earned, what your transfers were, and then your ending balances. So that is your audited consolidated financial statements, relatively as fast as I could go. Any questions, concerns, comments, complaints?
Anyone, George?
Good job.
Thank you, sir.
Yes, very well done. You went a lot faster than I thought you were going to go.
If there's anything you want me to go over, I can.
Yes.
Okay, yes. Sure. Yeah.
I'd like to know how much you pay for your house. And no, seriously, everything is here. What I would like to have is a motion to accept the audited statement, the audited financial statement.
I'll move to accept the audited financial statements for the municipality district of Digby for 2022.
And is there a seconder?
Seconded.
All in favor?
Aye.
Aye. Contrary minded, motion carried.
Wonderful.
A great job.
Oh, no. Thank you
Now the
very
year
much.
finished.
And you get paid more.
No, I don't get paid till Friday. Next week.
Get it early.
Next week.
Didn't know what day it was.
Why don't you just keep rolling and
From that teacher's salary.
And could I have a motion to adjourn the meeting, please?
motion to adjourn.
All in
Once you're
favor?
back, we keep.
Nope, those are.
All in favor?
Aye.
Contrary minded, motion carried.